What's going on, high rollers? Rollup Nation, final video of the ETHCC week here today at Nebular Summit day one. Here with my friend Charles from dYdX Foundation, which has a ton of interesting updates. If you guys haven't seen my technical thread recap, I wrote a good thread about the talk yesterday, mostly aimed at devs, but some good information there for users for testnet. Without further ado, let Charles introduce himself, and we'll get right into what's going on with V4 and dYdX.
Thank you for having me. Great to be here with you, and welcome again to Paris.
Yeah. Paris native you are? Are you a Paris native?
No, I'm from France, but I'm originally from North France, next to Belgium, a city called Lille.
Okay, fantastic, fantastic. Well, I'll tell you, Paris has treated me well. Last year I had a little bit of run-ins with some Parisians, but this year they've been a little bit more kind to me. Perhaps it's the middle of the bear market vibe, a little less twang. But anyways, we've done a lot of content in the past and a lot of focus about scaling in general. We're very bullish on just scaling the ecosystem. It's clearly a huge need after kind of DeFi summer, and kind of we saw that when a lot of transactions come on chain, right? There's clogs, there's some issues. You guys kind of front ran that and moved your version 3 onto basically an app-specific rollup with StarkX, and now going to V4. So I guess talk us through that initial transition as to why you decided to do an app-specific rollup with StarkX, and then furthermore, the transitioning into V4 with the Cosmos SDK.
Absolutely. So maybe to get back to the history of dYdX. dYdX was born in 2017. It was created by Antonio Giuliano, a former Coinbase engineer, and dYdX was born on Ethereum layer 1. So the product evolved over there, Ethereum evolved as well. Very quickly the app get some good traction, and eventually there was some kind of friction with the cost of gas and all the things you can imagine. And as well as an application, I think the engineers were also thinking like there were a high dependency on the underlying chain roadmap progress. So dYdX was one of the early adopter of layer 2s, as you mentioned, StarkX. So we've been on StarkX and doing great over there for some years now. But I think there was still this kind of feeling from engineers that there was too much dependency on multi-purpose chain roadmap progress, and we are very focused at dYdX as a protocol to really focus on decentralized finance for the use case of perpetuals. So eventually a decision was made by the engineer involved to look at other solutions beyond the layer 2, where we could increase the kind of throughput of the chain itself, but also progressing into decentralization of the protocol. And on the version 3 of dYdX, which is sitting on StarkX, the order book is still off-chain. That's something which is public information. There is no chain capable of supporting essentially the velocity of the order book. So by picking a stack which was enabling a better control of the full stack from the application level down to the chain level, it was essentially opening much more potential solutions for the engineering team to look at how we can decentralize further the protocol and essentially leveraging the best technology available to keep upgrading the experience for users and keep progressing into our own roadmap of decentralizing the protocol itself. So moving to Cosmos it comes for many reasons, but one of the main reasons is essentially, as I mentioned, controlling the full stack, so making sure you don't sit on someone else's roadmap and you don't have a dependency on their progress. Making sure also the chain you kind of host your application on is dedicated to your use case, so you can essentially fine-tune everything for your single use case and get a full stack which is much more efficient, so improving the experience for traders. As well as decentralizing the order book. So as I mentioned earlier, the order book is off-chain on the version 3. On version 4, there is this new kind of architecture design where the order book will not technically be on-chain, because an order book on-chain still have a dependency in terms of block time, and this block time will define essentially a latency into the trade execution, and that will be a friction point for the experience of users. So on the version 4 of dYdX, the order book will actually be hosted within the memory of the validators. So the validators of the dYdX chains will have two jobs. The first job is a very classic work. You need to verify blocks and mint new blocks. And the second job is hosting within the memory of your validator and updating this order book file so you can match orders as well. So it's really the technical decisions which was made to decentralize the order book without having it on chain. So we kind of deliver in this long-term roadmap for dYdX to really deliver the most efficient and performant user experience in terms of decentralized finance, as well as decentralizing the protocol itself.
Yeah, I think the key takeaways here with regards to the protocol itself is that kind of desire to have the control over your own destiny, effectively, right? Relying on Starkware or any other general rollup, puts you at that kind of at their mercy, right? And so, in the earlier panel with regards to our L1s, our app-specific L1s the same as rollups, the general consensus were those 2 points that you made, right? You can control your upgradability and customizability much more than a general rollup infrastructure. Very important for what I consider is to be like an island, right? dYdX is basically an island. People go there for one reason. Like, I'm going to Mykonos next week and I'm going to party. People go to dYdX, they go to make money, trade, and to basically hedge positions, take longs or shorts, and have an execution environment which can support size, speed, and low latency. And so, it's similar to that of, Binance, a BitMEX, which are obviously like centralized perpetual swaps, but those are also islands. People go there and that's what, they do. Now, with regards to composability for dYdX, do you feel that being a part of the Cosmos ecosystem allows you to have more users and liquidity bridges come from other Cosmos chains, more so than, on V3 with StarkX, or kind of what's your view there on the composability aspect with V4 now?
That's a great question. So, as a derivative protocol, we don't have so much dependency on composability. Essentially, users come on dYdX application, they come with USDC, and from the USDC, their USDC deposit, they start to essentially express their opinion on the market via a BTC long, ETH short, or whatever they want to decide. So we're not like a lending protocol where you need to have assets coming in to essentially kind of get the flywheel rolling. We are more kind of isolated and more independent. So migrating to Cosmos does not really represent a challenge from this side of things, since we have a core asset, and this core asset is USDC. There will be more probably later on with the community votes and other upgrades, but we don't have so much dependency. Moving to Cosmos really brings better experience overall, so we are able to control much more how the gas fees are being used within the platform. There is also a higher throughput. There is also a totally new design, new architecture of I would say the base, the chain, how the order book are being managed. So it just brings much more space for upgradability, and it's also kind of new innovations to come into the ecosystem of dYdX. So there is already people at work thinking of permissionless market. So beyond the original trading pairs you will find, there is also in the box with people who are working on this already, thinking of how you can essentially create a platform which is upgraded fast enough and ready to host some permissionless market. And by permissionless market means a little bit like Uniswap created this kind of new optionality for users of blockchain in general to come and create their own trading markets. You will have the same optionality with dYdX later when the time comes, but this is on the roadmap, and this is thanks to essentially an upgrade of the full stack, which allows us to do much more.
Yeah, I think that's the right idea, right? Same to that kind of mental model that I said of the island. People go there for one reason: it's to trade. They're not really worried about whether they can do other financial primitives there, or kind of. And you're also not reliant on kind of a liquidity flow. And I also think that being part of the Cosmos stack, it's easier for people who are using Osmo or Juno or et cetera to kind of just easily port over and make dYdX their trading platform of choice for that kind of more aggressive trading. And so to that extent, I'm kind of curious, shifting gears towards the user base. I know on the volume side, I don't know the exact numbers, but you guys are definitely top 2 with GMX and perhaps one more doing about $1 billion. It must be $1 billion per month, I think.
Per day, yeah.
Per day, sorry. And so where do you think, or where from the data that you're seeing, is that user base primarily? Is it institutions? Is it whales? Is it smaller traders? How many typical active wallets per day, per size? Kind of what do you think, or what is your best judgment as far as the user base of dYdX and thus similarly the user base for derivative DEXs in the space?
Absolutely. Before diving into the numbers, I think I would like also to highlight one thing is we're not expanding to a new chain and to Cosmos, we are migrating. So it comes with very strong convictions. We build these convictions over months of engineering and testing.
So V3 is going to wind down.
Exactly. Yeah. So unlike some other DeFi protocol, which will be expanding from layer 1 to different layer 2s and kind of trying many different places and see what works best, we build a much more a sticky ecosystem, a loyal ecosystem around dYdX. Remember, we're in this space since 2017, so it's really a migration. So as you mentioned earlier, there will be a transition period where eventually the version 3 on Ethereum of dYdX will essentially close, and version 4 will be at full speed. Today, if you look at numbers around dYdX protocol, so last year in 2022, dYdX reported $466 billion US of trading. That's more or less between $1 to $2 billion per day of trading. The base of traders is about 50 to 55,000, and this is also evolving and growing fast. And yes, the biggest trading pairs will be BTC, ETH, Solana, and the usual suspect will follow closely. And within the space of DeFi and perpetuals, it's more or less represents more or less 1% of the global market. So perpetuals are still mainly used used within centralized finance exchange, crypto exchange. But DeFi is certainly progressing. The way we see the market is events like the FTX collapse, I think have kind of wake up the appetite for large institutions, for professional traders to say, okay, there is new space, there is also risk on the centralized infrastructure. Sometimes you don't exactly know what happened behind those trading engine and who is exactly on the marketplace. You've got much more transparency and visibility on how the market works in DeFi. It's also non-custodial, so the exchange itself does not take the custody of your asset, which is, I think some people will definitely remember the lessons if they were impacted by FTX, for example. So there is really, from this large kind of institutional traders and large market makers, part of the ecosystem of dYdX, an acknowledgement that the infrastructure is definitely evolving, that there is the kind of direction of travel is clear. The pace of transition, it's quite hard to put a number on it. It's probably going to take 2, 3, 5 years. I would more bet on 3 to 5 years. I think this kind of big move from centralized type of infrastructure to decentralized will take more time. But dYdX is definitely showing by the numbers that the infrastructure is working, is capturing attention, and we see more and more people essentially starting their learning journey in expanding into DeFi infrastructure and expanding into dYdX. Usually the API are very similar, but in terms of infrastructure, you just need to reorganize a little bit your back office, your kind of flows, your risk management, and we see a lot of these people kind of engaging with the dYdX ecosystem and rethinking, okay, how do I start to diversify my trading venues, and how do I participate into the futures of the markets? And how do I get my learning experience, my team starting to be familiar, should it be from the trading side or the infrastructure side, familiar with this new type of infrastructure, and how do I support them, because this is really where we are all kind of heading to.
Yeah, and like any kind of massive industry impacting business, right? There's always a disruption of an intermediary, right? Like Uber took out taxis for the most broad example, right? And kind of, I think, for lack of a better word, dYdX's strategy is to vampire attack some of these centralized exchanges with a better experience, with better marketing, with explaining the benefits of being decentralized for you as a user, right? Because frankly, a lot of people don't really care. But then FTX happens. But then, CZ is under a whole load of scrutiny right now. So that happens. So I think similarly for your building strategy of kind of build the best decentralized derivatives DEX possible, you're also going to have some help from the regulatory side on the centralized exchanges as they kind of clamp down there. And you guys also move towards this kind of DAO foundation route. So talk to us a little bit about the reasoning behind this decentralization. It's kind of a moat, and kind of why you're building it this way and how that process is going to build out these sub-DAOs of this larger DAO.
Absolutely. So if you look at the ecosystem of dYdX today, you've got more or less 4 entities, and this is a number which is growing. You've got dYdX Trading, the original company behind the protocol, the dYdX Foundation, which is rich of 20 people, fantastic talents, helping with community works, decentralized governance, essentially supporting the ecosystem overall. But there is also 2 DAOs which have been built by the community, the Grants DAO. So obviously it does runs all kind of grants program. Over the past 2 years, the Grants DAO has been deploying $3.3 million to 100 plus projects, which have been building modules, dashboards, trading engines, made some research, adjusted many different things, or made some proposals to the community on how to adjust the governance and various components of the protocol. The latest DAOs built by the community is the dYdX Operation DAO, which was funded earlier this year. They also raised some money from the community, so they raised $6.6 million, which allows them to get a kind of a clear path, a clear kind of runway for the coming 18 months, as well as hiring full-time engineers and full-time employees to really be part of the ecosystem and being one of the pillars, providing some key services for the chain. The dYdX Operations DAO is also interesting. They decided to really kind of step up the game of DAOs, and to the best of my knowledge, this will be the first DAO which will be using external auditors to kind of audit their accounts, audit their kind of operations flows, to make sure that they're properly running the DAO, they're procuring services, for example, the right way, their pricing is right. So it's something we haven't seen yet, but we have very strong signal around the dYdX ecosystem that this is one place where the professionalization of our space is popping up. So the DAO, the Operations DAO choosing to get a third-party auditor. We see also much more professional players coming in the dYdX validators ecosystem. So there is about 50 validators today on the public testnet, and this number increases regularly. But we see more and more new type of validators. So you've got the usual suspect of crypto-native validators, but we see people like Google, we see people like Galaxy Digital, we see some validators which are really focused and very large teams on deploying very high performance type of validations with very strong SLAs. That's probably something we were not seeing like a year ago. That was more kind of passionate people or very young structures. So we see this professionalization of the space as a very good signal that people are supportive of dYdX in general, but for our industry also, seeing that we are growing and it's more competitive and everyone is kind of stepping up their game, and that's a net positive for everyone.
Yeah, most definitely, and especially with V4 arriving quite soon, it's an exciting time and also a timely opportunity for the operations DAO to kind of get up and running. It seems like that they'll have quite a bit on their hands in the coming months. So with V4, would love to give our community kind of what the roadmap is, the timeline, what they can expect, when they can try it, and then how to basically take most advantage of this upcoming launch.
Of many different testnets, so definitely big testnets, that's where 50 validators and this set is going, are kind of doing the final testing and putting the chain in all kind of scenarios. Later this year, I don't want to make any promises, the engineers are delivering when it's ready. Later this year, V4 will eventually will be launched, and then we will observe some kind of progressive transition between the version 3 sitting on Ethereum to version 4. And then people will be able to start using dYdX on the new type of infrastructure. No big change on API, so from the user perspective, this should not be very disruptive. You will be able to come with your MetaMask wallet, you will be able to come with your Coinbase wallet. So the engineers at dYdX are really kind of reverse engineering everything from the trader experience, from the user experience, and thinking, okay, how we can twist everything we can twist so that it's as smooth as possible, and people possibly barely realize we actually upgraded the full underlying stack with an Ethereum, with a Cosmos chain and all these good additions, right? So transition should be fairly quick, and then a lot of talks already in the community forums about permissionless markets. So why I'm excited about permissionless market? Permissionless markets will enable essentially users to come and create new markets. So you should probably expect more altcoins being launched. Totally. But I'm very excited about what some people started to converse about is bringing real world assets, bringing assets possibly you are trading on the commodity exchanges such as Chicago, and why not bring these really exclusive markets such as price of corn, betting on the price of the electricity in whatever market, and really democratizing the access to this kind of assets. And what the magic is, and why I'm excited, is we don't really know what will come. Yeah. And if you set up a right product with the right risk management around it, good formulas for liquidity, it essentially brings like the best ingredients for various users to come and say, I've got this use case. And what is exciting is when you are unclear of the type of use case which will come to you, and this is where you get very often some great and inspiring surprises.
Yeah, no doubt. I mean, that's the coolest part about derivatives markets is there's literally a market for everything. Like you can go from mangoes to onions to sugar to electricity, oil, and then all the way to crypto. It's kind of endless. And then, I mean, as long as you have the right technology in place, like you said, people will just come. And I think also some alpha for our community as well is here that I'm sure there's going to be some sort of little extra cherry on top to come over to V4 from V3, because I know those users are earning some good yield and getting some nice rewards there, so looking forward to that, but I won't make a comment too much on that front. Anyways, though, it's been an absolute pleasure. I guess closing thought is once you're done scaling the derivative space and you've taken down sorry about that. Once you're done scaling the derivative space and you've taken down Coinbase and Binance and you're the king of derivatives and dYdX is in the newspapers every single day, what passion project would you like to work on using blockchain technology? What interests you? What I've heard liquid governance, I've heard liquid democracy, I've heard ZK for different types of games, things like this. But just curious about something that interests you personally.
As there is many things interesting in this space, and sometimes you need to focus right. Sticking to dYdX, I'm just very excited by the different type of assets and bringing maybe more different type of user profiles to the ecosystem. With permissionless market, you can imagine people coming and expressing their opinion on video games assets, building indexes, building all kind of financial primitive. There is a big staking ecosystem growing up in the world of Cosmos, which will bring a lot of opportunities there. So yeah, just expanding the people around the table and sharing the pie. I think we're still quite a small space, so one of our responsibilities is also to make better products, to stay engaged with regulators and making sure that we keep building and we keep demonstrating that DeFi is here to stay. I think we've got very strong signals. You see governments starting to use CBDCs, starting to leverage the technology for different use cases. People might have their views on CBDCs, and I respect that, but overall, I take it as a signal that what we're building is meaningful and people are starting to reuse some components of our works in many different contexts. So it just brings more people to the space in general. And I see DeFi as an upgrade of the internet in general. So if I see people using less their whatever money systems and they get a more fair and faster and better money experience, I think that's just a really strong and impactful contribution we do to the digital societies we're living in.
Yeah. Spoken very well. I appreciate your time and best of luck going forward. I'm looking forward to V4.
Thanks for having us.
Cheers. This video is brought to you by Connext. Connext is a cross-chain protocol that lets you build cross-chain applications and experiences in a secure way. Rob and I really enjoyed their tech because they don't add any new security assumptions on top of the connected chains, as they don't rely on an external validator set or an oracle. Security is definitely paramount in DeFi, so we're excited to work with Connext.